What we can expect, guys, heading into the new year. It's that time of year where we like to pull a few names out of a hat, if you will, and say, hey, watch these going into the new year for whatever reason. Let's get into a few stocks that we can maybe put in our back pocket for 2022, guys.
All right, let's do this. So I've talked on the show live a couple times for a play that we've really liked, and that was going to be SoFi. But today, SoFi is gone. We talked about SoFi at 14.50. Today, you're up to 16 and change. So that name's going to continue to work. We'll see if that is one to play for in 2022. I believe it is. I think you have a lot ahead of it with the Super Bowl, with some good media attention there. Super Bowl happening at SoFi Stadium, of course, in LA. But my pick is going to be Disney, guys. Look, I sold some off their last earnings report up here at 170. It's about time to buy back in. We're just now going to crack through the 50-period moving average. If you didn't, I was buying a little bit down here, but we're going to start recommending stocks from these current prices, right? So I can't just say, oh, if you're long at 144, great long. Let's talk about right now. Let's talk about being real and actually buying some stock for the future. So Disney right now. Let's talk about why we like this stock. Okay, 120 million subs right now on Disney Plus. That is dwarfed, obviously, 250 million subs on Netflix. Leads me to believe that there is obviously demand for streaming services. So Disney just got involved in the streaming game, right? They had it at the right time, at the right price, free for a lot of people. And now they're going to start to see some paying subs come through. Now the numbers have been hurt lately, which is why you get this dip down, right? The numbers were not there the last quarter. They came in on Disney. That, to me, just reflects poor content. And we've talked about the content a few times on this show. It hasn't been great. They had pandemic delays, right? You can't fly actors, actresses everywhere. You can't get the cartoonists, the animators, everything. It's a tough world right now. So I like Disney moving forward. I think there's also, guys, pent-up demand, Robbie, for opportunities to travel. We've talked about that. Disney has over 12 parks worldwide, right? 12 international theme parks worldwide. They also have the cruise lines. You want to talk about CCL? Sure, CCL, One Trick Pony, RCL, same thing. Disney has cruise line capabilities, okay? So not capabilities, they're in that game. They have destinations. All of my friends, pretty much, ready to rock and roll. If you have young kids, they're ready to go back to Disney. So let's see. If we get through COVID, I like Disney here. Another reason there, right? We've just had Spider-Man go through. So it looks like some of the new content is starting to hit and starting to make some sense, starting to make some money for them. So Spider-Man coming out pretty hot. We do have new data coming through on their streaming service. They're talking about getting to 240 to 260 million subscribers by the end of 2024. That's going to be monstrous. That should drive this name back up there, okay? They're down. Before today, you're up 1%. But before today, they're down 12.6% year over year. Not a bad opportunity to pick up Disney here. Plus, to take a word from my friend Kevin O'Leary, they have cash flow. So their cash flow this year in this environment should work. You want to stick with the companies that bring in the cash, 62% year over year cash flow over last quarter. So I like Disney here. I really think that it makes a lot of sense. And if you don't believe me, the average price target on the street is 196. So look, analysts are wrong all the time, for sure. But the point is, there's some love for Disney here. Not only that, they cut their dividend to work on growth opportunities. If that comes back in, Disney spikes on that news as well. So let's wait to see new management, everything for Disney. I like it. Hey, and what if they spin off ESPN? Let's not even talk about unlocking some value. So for me, it's Disney. All aboard Mickey Mouse.
Yeah, and for me, it's going to be TJX. I feel I've talked about this company before when it comes to just outright great. It looks like what could be a great holiday season for them because one, let's talk about the technicals, right? It's been, for most of 2021, it has been relatively sideways. It has been coiling up after taking out the 65 level. We've gone as high as 75. We're hitting near highs right now, but we've gone as high as 75 for the year, or 76 and change for the year, and as low as 64, essentially that breakout spot. Here we are on the back end or on the top end looking to kind of peak out. Here's the other thing too. What's going on with all these shipping delays? You know, right now there's a huge issue with ships not being able to unload their cargo and whatnot. So if certain items can't make it into store by the holiday season or when they're supposed to for seasonal sales, where does it end up going? It ends up going to these type of retailers like the TJ Maxx's and their Winners, and in Canada, the Winners and the Home Senses and the home goods stores. Those kind of stores that can just put it on the rack, no notice, they don't have a website. They just, whatever you go in store, you find, right? And if people know that this type of stuff is going to be hitting the stores, you're going to see a lot of foot traffic. And I feel like based on the way the chart is looking up and based on the time of year, and with all these shipping delays, you're starting to notice with goods and not services, but goods not being able to make it on time to where they need to get to. I think TJX is definitely a chart that's setting up very nicely at the right time of year. And if it's going to take these highs out, the high for the year is 76.94, and we're sitting $1 below that. As we go into the end of the year and holiday season, sales are going to be coming out soon. So I think for my pick of the year for next year is going to be TJX.
All right, we'll wrap things up with a continuation, I guess, of a conversation that we were having on this very show this morning. If you joined us with Rahim Alani, and I'm going to go back, guys, to the lithium space. All we've been talking about in the past couple of weeks here is the demand for EVs, new EVs, more EVs coming. Everyone walks around with multiple, not just one, but multiple devices that have batteries in them now. So I'm going to go back to the lithium space here and pull out LAC. I mean, I think you're pretty safe with anything in this entire group. There's LTHM was another one that looked pretty interesting on the chart. But LAC, Lithium Americas, which is kind of funny because it's a Canadian company headquartered in Vancouver. In fact, really like this chart. 2 years in a row, this thing has had pretty impressive moves. $28 actually right now looks pretty good. For LAC. So I'll wrap it up with a bit of a battery play, maybe. Lithium America, guys. Few stocks there to look at in 2022.